All right, guys, welcome to the Tuesday evening edition of Hurley Investments Trade Findings and Adjustments. Today's February 11th. Great to see you all. I'm just going to go ahead and get to it and assume that you can hear me. I'm sure someone will bother me if they can't hear anything. So, thank you. Good. All right. So what do we got today? Well, I sat through listening to Fed Chair Powell answer questions from Congress and all of that ridiculous show of emotion. I really kind of feel for the guy. He seems to he gets it from both sides. He's got the president tweeting in all caps and yelling at him virtually, and he's got some of the Democrats in Congress asking him questions about bailing out Detroit and why the Fed didn't look into that, and is he looking into and worried about the potential economic cost of water tides rising and all of this stuff. And gosh, the poor guy just can't catch a break. What that kind of tells me, though, and it's just kind of a feeling and not necessarily any real numbers to put to it, but usually when somebody tends to upset both sides of the political aisle, they're probably doing something right. So I thought that that was interesting to watch. If you haven't watched one of those press briefings and where he answers questions from Congress, it's not the most entertaining thing you can do. It's pretty boring because he pretty much repeats himself, and they keep asking the same stupid questions to look good to their constituents and look like they're doing something and yada yada yada. But it is kind of interesting to see how things are handled. So that was interesting, and we didn't really see much of a reaction to any of the Fed not doing anything today. It was up more, and that's one of the things that Trump tweeted out, that, hey, every time every time Powell opens his mouth, the market drops, and that's kind of true with every Fed chair. Their market goes up and kind of pairs back and kind of moves around a little bit as they speak. So kind of funny. So what do I want to talk about today? We did eke out a new all-time high on our S&P. I think the Dow was slightly negative. Let's just actually need to type it in here. Hello. It was just a little negative. Right at that top and coming back. But the S&P and I think the NASDAQ was too positive. Yep, and both hit all-time highs today. So, and they hit them and kind of paired back. Kevin spoke a little more about that yesterday. So if you didn't get a chance to get more of the market view, go ahead and check that out. It kind of followed through with what he was talking about. So I had a few ideas as far as wanting to look at some trades and ideas. A couple of the big headlines and stories you may have seen come across was the Sprint and T-Mobile merger being approved by federal judge, and now has to be approved by can't remember the name of the bureaucracy, but some bureaucracy in California. But all things considered are given the thumbs up to go ahead and merge. So that kicked up those two quite a bit today, more Sprint than T-Mobile. Sprint was up over 70%, which is, wow, if you'd caught that bottom, that would be pretty sweet, but could have gone either way. And you heard Kevin mention it last night when it was more of a speculation, and it was until this morning, and that got flipped on its head. I think T-Mobile is only up 10%. So I'm just going to say up big. So these two, just to give you a little background as I kind of looked into it more, because I admit I haven't necessarily followed this in depth, other than, articles the last 2 years when this first got brought up in April of 2018 that they'd like to merge. So it's been a while coming. So let's see, Sprint. So you're probably looking at it like, wait a minute, they were down today. So you have to come way up here and check out this huge gap right there. Opened up around 835 and headed up to 852. Overbought, of course, makes sense. And then T-Mobile, nice gap as well. From 85 up $10 almost, 94.49. So basing a trade off of one of these two, what would have to happen? And obviously the idea being that there's some follow through, because the previous agreed upon share price amount that T-Mobile had agreed with Sprint to buy them at was up at $10. So you think, well, $8.50, that's a good $1.50 upside there. The problem is that it's not quite definitive as far as how easy the price could be renegotiated with regard to T-Mobile buying the stock outright of Sprint at the predetermined price of $10. So as I looked at it, I kind of want to. My feeling at this moment in time is to see if we can't see some follow through. The big gap like this is always that deal where it could come down as we wait to get things, as we wait for the deal to officially complete, which could be, several more months into the future. And so my thought is maybe we have a little time here where we can see if it pairs back or holds some of these gains before, moving up more. But just for the sake of checking it out, I want to just look at sprint calls and just see what we've got. May is a ways out, but for an idea of something like a bull call in the near future, something like 9 and 10 or a 8 and 10 might look good. Let's just see what it looks like. Break even 81, which doesn't seem bad. It's only 30 cents above where it's at. May gives you more time, obviously, in case you guess wrong. What I don't like is how little credit there is. For $1.15, let me change this to 9. That's only maybe $1 of upside, just considering the difference in strike prices there. But that gives us a better risk to reward, 2 to 1. But obviously gives us a higher 932, a higher break-even price. So let's go the other way. Let's take a look at 8 and 9. Which looks even better. That gives you a little more credit, 50 cents, around 55 cents, that if you had to could be fairly easy to adjust or take off and lower your cost basis. But on 10 contracts, max profit of 680. cost basis of 50 cents ish, lower cost. So that's something that you could look at. But so here's what I'm kind of thinking. I'm going to take a picture of this just to have it in as one I'd like to look at and kind of see some follow through tomorrow or the next day, maybe revisit Thursday. So this is Sprint right there. So we're looking at a Sprint. I'm just going to write it so don't get confused. $8 to $9 bull call spread for about 50 cents. So let's look at it again Thursday. All I just want to see is whether it pulls back tomorrow. Kind of just want to see some follow through. And it's easy enough if it continues to go up towards a 9 to do a $9 and $10 spread around the same price or somewhat close. But like I mentioned, it's not necessarily a no-brainer, and with everything I've looked at, certainly positive with that boost today, but we only make money if it continues to go up. So, what do you guys think? Any questions about this one? T-Mobile may try and renegotiate a little bit and get the price closer to $9, and that's kind of the risk. But there again, it's still not at $9, and let's take a look at it. Question is, so you'll make a call on Thursday? Pretty much, Rich. Yeah, I kind of just want to keep this one in the bag until Thursday. Doesn't mean you can't go for it. Just means that I kind of want to see where it goes the next few days. So the other one, look at real quick, was Hasbro. This was pretty interesting because they opened big on their earnings report yesterday, from yesterday, or maybe it was, I guess it was before market open. I think it was today. It was one of the two. But their big moneymaker was toys for Frozen 2, Mandalorian, Star Wars, all things you'll know from Disney. So, what's the problem? Why do you think we might want to take a second look, be patient, or just not do anything with a Hasbro? See this big red candle. This is where it opened up here at almost 108, and this is where it closed at the end of the day. It couldn't hold its gains. And in fact, you'll see this big red blob here is a lot of volume. On the other hand, we're oversold on the Williams percent R, so technically not at a terrible point, especially if you look at this pivot point as a support point and $100 price level. All those things could be positive. It continues to go reverse back up, but I certainly would feel a lot more comfortable doing something with Hasbro if they held at least that 105 200-day moving average, and that's kind of a big support level too, because it was a former resistance level. Kind of lame that it didn't hold that, but some of the negatives were more of the coronavirus worries, since they have factories out there in China that might have to close or have closed, waiting on the sidelines. And they, even though they beat significantly on their bottom line due to those Disney brand toy sales, they struggled with year-over-year revenues and things like that. So I think the worry would be, well, holiday season's over, what happens in the future? And I guess that kind of created a bit of a sell-off, or not a sell-off, but what's a better word? The sell-off is kind of what would happen if it continued to go lower from past support levels. It kind of just didn't hold gains. So that was another one I was like, hey, maybe there's something there, but I really wanted to see it hold 105. 100 could be a good support level, but again, with going in line with a lot of the things you've seen, specifically with Starbucks, let's go look at Starbucks, that Kevin has mentioned, wants to see it prove out technically. Can't get above the 50-day here. His trigger was, can it hold that 50-day? So something on Hasbro might be more along the lines of, can it hold that 100? Can that reverting of a high open maybe start to melt back up? So, thoughts, questions on that one? I don't think I'm gonna look at a spread or anything for that yet. I think we can kind of look at that again. but it is kind of weird that after such a good earnings beat that it just couldn't hold it. But that's something I would want to obviously stay away from adding a trade until we kind of see things prove out. So once again, let's keep an eye on it. If it holds that $100, not some $100 support level. Another one I was looking at that it's not going to get you that crazy explosive gains like if you had got in on Sprint a day ago and had a 70% return, but I want to revisit a possible target covered call. So here's where target's at. They came down through coronavirus and that kind of stuff. Fell from up at around 123, 124 support level that have traded through end of December through January, beginning of January through December, beginning of January, and opened down and has traded between this 116-ish, 117-ish down to 110. Kind of a range, but that's kind of how target is. It kind of has these $5-ish sideways ranges. You'll see through this period, goes there, then it jumps up, kind of trades a little higher, and then they have an earnings and jump up, and earnings and jump up, and sideways. So a couple of things that pique my interest is we're at the topish end of this range. So if we did a covered call, we wouldn't have the best stock price, but we would have a decent credit on a call where if it starts to melt up towards earnings, which it did before a little bit, you can kind of see the very beginning of the chart, where if we get a little bit of a melt up towards 120 and get called away before earnings on March 3rd, we will be able to be in it through a dividend. Erase these. Look at target. Ex-dividend of the 18th. So, one that you could definitely look at tomorrow is this. And what I'm looking at is, so 66 cents dividend, quarterly dividend per share, 66 cents, obviously 2.26 for the yield of the year. But we're only in it for the one quarterly dividend payment for 66 cents. So we'll factor that in, add it in with our credit, and see what that gives us. So Since the earnings is on March 3rd, I'm just looking at February 28th is the closest one. March 6th, the next expiration puts us after. We want to be out of it before that point. We want to capture that dividend, 66 cents, and get a little credit here. So, just looking at it, I certainly like $1.30-ish. Come up to 118. That gives you the stock price around a little over 116.50. I would look at seeing if you can't get in closer to 116.50 tomorrow, since it's kind of at the top of a pivot point. You might see it down slightly tomorrow. Let me just look at the futures, and it's just kind of unchanged. So that's where that's at. So looking at this 130-ish, just add one credit, one contract, short call for credit, February 28th. Ideally, I'd like to see 120 just to get a little more upside room, but it really doesn't give us a ton of downside credit. So snapshot analysis isn't going to matter because it doesn't have our bid and ask for stock here, but gives you an idea. $1.32 of credit. Plus 66 cents dividend. Let me just copy this here. Just remember you have one contract, short call per 100 shares. I'll leave it to you to decide how big or small, how much room you have for something like this. $116.50 price. It doesn't have to be perfect, but see what it does tomorrow. Look at it for Mountain Time, and for us it's around 10 to 11, 9:30 to 10:30-ish, around that area where the East Coast noon is out to lunch. But see if it melts down a little bit. And about $1.30. Obviously, if it comes down, we're going to get a little less credit, which is okay. So I'll put $1.30-ish of credit for February 28th. Short calls. So just on those basic numbers, going off of where it is, we've got 116.69 that it's at right now, minus 15, about $1.31 of upside, which is why I kind of say, let's see if we can't get closer to $1.50 or kind of break the difference there, maybe $1.40, see what you can do. And then around $1.30 for February 28th. So just factoring in the dividend of 66 cents. Quarterly. Plus $1.30, and give us almost $2, $1.96. Plus the upside of we'll break the difference and call it $1.40. I'll put the range $116.65. And that is going to be $3.30. So assuming it goes up, we get called away, we'll have $3.36 of profit, or around, divide it by 116.60, about 2.8% profit, closer to 2.9. So what do you guys think in about 17 days? 16 tomorrow, but you could certainly do worse. Obviously, the risk goes down the other way. Our support level is around 110-ish. So at the end of the 17 days, if we're closer to 110 than 120, you're just looking at probably getting out for a small loss and not going through earnings, as this typically isn't, targets or retail for that matter. It's not the quarter. Any questions, thoughts? Concerns? Gee, this one's dumb. Give me something with like 50% return upside. Well, I'll say we do have a couple things on the horizon to look at, but as far as something that you could put on tomorrow and kind of be okay, I think that would be all right. Any questions, guys? Thank you. What is the strike for the short call? I was looking at 118. Thank you for that. You've also got it down here in the picture as well. So that's what I'm looking at. I think that's it for me, unless there's any more last second questions. And guys, thanks for joining me tonight. Looking forward to seeing you again Thursday. Take care.